All right, welcome everybody to another episode. Today I'm going to be teaching you guys how to get your first payout. This is going to be a very simple model that is backed behind ICT concepts and the time and price theory. And I'm going to be explaining how to manage your risk properly, what model entries to take, how to attack the trading markets. As I'm not going to say beginner, but not someone who's advanced and intermediate. Maybe a couple years in, you've never gotten a payout, but you've passed challenges before. This is how you get your first payout in futures. So let's get right into it. First is simplicity. One chart, one monitor, one notebook, one entry time frame, submit to time, and have a trading routine. What I mean by these is one chart. Don't focus on Euro to USD, GBP, and all these other forex markets while you're looking at indices and Dixie and you're looking at bonds and yields all at the same time. Do your analysis on the weekend. Go into the week with a strong narrative and then focus on one chart. You don't even need to focus on ES, NQ, and YM. You can use them for SMT for your analysis, but again, focus on one chart and keep it simple and clean. One monitor. This goes into one chart. Don't have 7 different monitors with 7 different charts, and you're just going to be distracted when you see a setup somewhere else and it's too much of a mess. One notebook. Keep a simple journal while you're trading. Journal all of your thoughts, everything you did right, everything you did wrong. Highlight everything you did right, because when you journal what you did right, your brain takes it as, I need to continue doing this. If you only journal something that you do wrong, you're memorizing your wrong moves and you're going to repeat them. One entry time frame. What I mean by this is don't have 5 monitors looking at the 1 minute, 3 minute, the 5 minute, the 15 minute, the 1 hour all at the same time. Look at the higher time frame, 1 hour, 4 hour, daily, even the 15 minute. Find your higher time frame narrative, your draw and liquidity, your PD arrays, everything you need to know, and then stick to your one time frame for your entry model. I like the 1 minute. I do all my analysis. I wait for price to hit my higher time frame POIs, do a certain thing on the higher time frame. Then I only look for a market structure shift, fair value gap, or inversion on the 1 minute. Submit to time. Don't get onto the markets at 8 in the morning and then get off at 2 p.m. If you are not advanced, and when I mean advanced, I mean more than 5 years in the markets, multiple payouts, the best thing you can do is get onto the charts, have written in your journal, all right, if price does this at 9:30 and then does this, I'll take the setup. If it doesn't, I wait for 10 a.m. 10 a.m. does the silver bullet, I'll take the setup. If it doesn't do the silver bullet, then you wait for your next time frame. I personally only trade 9:30 and the silver bullet. I also go to school as I'm a student right now, and I have other things in my life. So ideally, I don't really want to stay on the charts from 8 till 2 p.m. So write in your journal a specific time macros that you want to see price do something at that time. And if it doesn't, don't force a trade. One mistake I made when I first started trading ICT concepts was I would just wait the whole day for a simple breaker block setup. And if I got it wrong, I would want to chase so badly because I didn't just wait 5 hours just to lose a trade. Get onto the charts, get it over with, wait for the times to pass, then move on with your day. And have a trading routine. This goes into submitting to time. Make sure your whole day is organized. You get up, you eat breakfast, you get dressed. Don't be an underwear trader. Act professionally like you're in an office. Get down, write down your notes on your journal, write down what you see, and then say, all right, when 9:30 is approaching, oh, we see 9:30 breaks buy side liquidity, taps to a higher time frame POI. Now I'm going to be looking for shorts. Or 9:30 didn't show me what I was looking for, so I'm going to sit back and wait till 10. Next is let time set the narrative. Get on the charts, only looking for setups if price reacts a certain way at a specific time, like I just said. Don't get on the charts and sit for 5 hours waiting for a setup. If your setup doesn't show at a set time, get off. This is quintessential. You will 100% chase your losses if you sit on the charts for 5 hours and get a loss. You're going to say to yourself, I didn't just wait 5 hours on my desk to lose. And psychology is going to kick in and everything's going to seem all messed up, and sooner than later you blew your account. That's why it's best to have things in your life. Don't just fully rely on trading when you first start up. Have a job, have hobbies, get on the charts, organize the time in your day for the trading, pick time frames that are key time frames and macros. Like you can have the 11:10 macro if that's what you like. I like 9:30 and 10 a.m. Next, simple risk. This is really important. Most people, when they first start trading futures, they jump in to minis and they over leverage, and sooner than later they blow their account because they had 2 losses in a row. One of the easiest ways to stay consistent with your model, your risk model and your trading model, and not chase your losses and go into self-destruct mode is to risk less. Understand that you don't have $50,000. If you bought a $50,000 evaluation, you don't have $50,000 to trade. You have $2,000 because that's your drawdown. You only have $2,000 to lose before you lose your account. So you need to risk accordingly to your drawdown, not to your actual account balance. So 0.5% risk per trade on a high probability day. That's still a lot. 0.5 is a lot. You don't even need to do that. But for example, for me, 50K account, if it's a high probability day, I'll risk $250 per trade. If it's a low probability day, and for example, like I explained in my last video, London session already had the distribution, then I'm going to cut risk and only do 0.2%. 2% daily target. So for a 50K account, I'm aiming for $1,000 a day, and I'm only allowed to lose 1% daily loss limit, which is $500 on a 50K. Anything more than that, you're getting to dangerous territory where it's going to take most likely more than 1 day to catch back from your losses. You want to make sure that if you hit your daily loss limit, you can make that back plus more the next day only from 1 winning trade or 2. Now, let's jump into the charts, and I want to explain entries and how to attack the markets and what to look for. I explained this in my previous videos on the time then price theory, the AMD accumulation, manipulation, distribution. Today, I'm just going to be explaining in very simple terms the entry that I take and how I've gotten profitable from this model alone. So we get into the charts and we see that London session brought us higher above Asian lows, and it's approaching 9:30, and 9:30 drives us higher, breaking London highs, and then taps into a higher time frame POI. This is quintessential to have higher time frame narrative. If 9:30 breaks London highs and we don't have higher time frame narrative, who knows if it's going to go lower? Because what if we tapped into a higher time frame bearish PD array and we're bullish on the week, we're bullish on the day, and we just continue higher from London? That's why higher time frame POIs and higher time frame narrative draw on liquidity is super important. So back to what I was talking about, 9:30 drives us above London highs, and we enter into a higher time frame POI at 9:30. Then we displace lower, confirming market structure, and we retrace back into the displacement to either enter into a fair value gap trade here or a inversion here. This is what you're going to see on the 1 minute. All right. On the 1 minute, you're going to see a few candles driving higher as the 9:30 Judas is what I explained. And this is the higher time frame POI. Could be 15 minute, could be hour, could be 4 hour, whatever you looked for. And on the 1 minute, we drive lower, confirming market structure shift. And then you take the entry. There should be a fair value gap here. If there isn't, there could be an inversion. You take the short and ride to the Asian lows. That's my AMD time then price theory and model. This is my personal favorite. Next, we have the silver bullet, where we have 9 a.m. lows, 9 a.m. highs, and this basically confirms bias. ICT says you don't need bias for silver bullet. If we take 9 a.m. highs and we form the entry, we go to 9 a.m. lows. I personally don't like that. I like to have a little bit more confirmation. So if this is 9 a.m. highs, and at 10 a.m. we displace higher, breaking 9 a.m. highs, and also tap into a higher time frame POI, that is a very strong indicator that the silver bullet's going to work. The reason why I trade 930 AMD and silver bullet and that's it is because a lot of the times when 930 doesn't show me a Judas and it just consolidates, the manipulation is going to be 10 a.m. It's usually 930 works and I catch the entry and I don't on the 10 a.m. or I catch the reversal later on in 10 a.m. or 930 doesn't work and 10 a.m. takes the highs or lows and I catch the silver bullet. So again, you take the trade, market structure shift for value gap after entering into a higher time frame POI, and we take 9 a.m. lows. So from 9 a.m. high to 9 a.m. low. That is the two models that you need to be profitable in trading. These are the easiest, I'm not going to say easiest, but the most simple. You know what you're looking for when getting on the charts. You have time already in the narrative. You're saying, all right, if this happens at 9:30, I'm going to do this. It doesn't, I wait for 10. If this happens at 10 till 11, I'm going to do this. It doesn't, I get off the charts. Done for the day. You don't waste all your time sitting on the charts. That way, if you lose or you don't get a setup, you're not chasing your losses or chasing an entry. Now let's get into a day where we have a pretty clean example here. So I showed you this on my video yesterday. I'm going to show it again just because it's very clean. Here we have 9:30. Let's drop into the 1 minute. 9:30 consolidates. So I didn't have my 9:30 Judas. We didn't have a big swing at 9:30, taking out highs or lows because we had consumer sentiment at 8:30. Again, big news drives tend to have the fake move and then the real move confirming bias. 9:30 consolidates. So what do? I don't chase an entry here. I don't try, there's an order block there. Let me take the short, right? I'm not rushing anything. I'm like, all right, 9:30 didn't show what I was looking for. I'm going to jump into 10 a.m. 10 a.m. happens and we have this manipulation leg. And we tap back into the consumer sentiment fair value gap. And we form a high. We expand higher. And we form a fair value gap and then trade back down into the fair value gap, respecting consequent encroachment, which is 50% of the fair value gap, that line there. I took this trade. I'll show you guys right here, right now. I took a trade up here and I took a trade from here. But all you need is the 10 a.m. silver bullet if 9:30 doesn't give you what you want. And you ride it all the way to 9 a.m. highs, which is right here, which we take at 11:41. So it's a little bit of a longer trade, but you have your winning trade here. 9:30 didn't show what I wanted. It didn't displace. It didn't have the Judas. So I wait for 10 a.m. 10 a.m. did show what I wanted, and I took the entry, and that's it. There's other examples where price doesn't show it doesn't show a 10 a.m. silver bullet entry, and instead I have the 9:30 Judas. For example, 9:30 Judas. We rally higher, trade into a fair value gap, market structure shift, high, low, higher, high, lower, low. Trade up, we trade into this order block. We respect the highs by an inch, and we move lower. At 10 a.m., we didn't take 9 a.m. highs, so there was no silver bullet here. But we had the 9:30 Judas model. So this is how I trade. I like to have two types of models. If this happens, that most likely won't happen. If that doesn't happen, this most likely will. I get on the charts at 9:30, know what I'm looking for right off the bat. If I don't get it, I'm not interested in anything else until 10. If I don't get 10, I'm off the charts. Keep it simple, guys. Know what you're looking for when you get onto the charts. Keep a simple but proper risk management model and journal all your thoughts. Only take these two entries, back test, do your work behind the scenes, use Notion. There's a famous quote that says the results you aren't getting is behind the work you aren't putting in. If you follow these two models, I promise you, you will be profitable. Submit to time. This is what made me profitable, and this is probably the easiest way to get a payout in futures. So I hope you guys found this insightful, and until next time, I'll see you guys later.